Today on Crunch Week, we're talking about Zenefits raising a huge new funding round, the Apple Watch going live, and Amazon's amazing quarter. Hey there, I'm Colleen.
I'm Alex.
And I'm Kyle.
And Zenefits is a story that, Alex, you were a co-author on. You broke a big scoop about the company.
Well, I helped other people internally break a big scoop. I really don't take credit for this one at all. But yeah, Zenefits, who we all love and I've heard too much about lately, is raising between $300 and $500 million at a $3 to $4 billion valuation. So even for today's standards of like Slack and so forth, this is a massive amount of money at a valuation that Box really wishes it could have.
How much had Zenefits already raised up to this point?
I think it was like 125 or something, but I have to check that for you. But the point is, this is a simply ridiculous amount of money, and they're going to spend it on, we think, headcount, growth, and really trying to accelerate as fast as they can because they're being valued on essentially top line expansion. And we hear they should hit a run rate of $100 million a year by the end of 15 and do about $50 million in GAAP revenue this calendar year.
What are you hearing from investors? Are they all on board with this round? I'd imagine that some people are probably like, all right, this is a little rich for me.
Yeah, I talked to a few people that I know that are VCs that didn't want to talk on the record per se, but the overall sentiment that I picked up was that people are like side-eyeing this. If they don't have the documents and then you hear about this, you're like, I don't know if that makes sense at all. And I think that people are a little eye-popped at the valuation. But Zenefits is, the fastest growing SaaS company ever, and that commands a premium right now.
So, raising that much money, it's expected that they're going to greatly increase headcount. Is this one of those situations, though, where, they might become so big that in a couple of years, if the market for capital dries up, they could be in, one of those vaporized situations we've all been warned about?
If they increase their burn too much now when capital is very abundant,
right,
could they end up in a situation down the road that has a lot of problems for them? I mean, the answer to that is always going to be yes. The question is, where will the gross margins be? Mm-hmm. How close to profitability will they be? And can they hit their revenue growth targets? Because if they can, and the overall metrics look good, they should still have access to more capital. You don't let your unicorns die on accident, unless they're terrible. But I think the investors are betting that Zenefits has enough core strength to its metrics and overall margin structure that it should be fine. But it's so much money in one slump. I wonder if you can't not screw up a little bit with this pace they're going to have to spend at to use that capital effectively.
Real quick, you said it's the fastest growing SaaS company ever?
I'm like 99% sure they've claimed that. Although now I really want to make sure that I can go check that before we put this on the internet.
Right. Well, we'll find out. If it's on the internet, it's got to be true.
I was told that.
Yeah. If the CEO of the company said it about his own company, it's got to be true. He would never lie about that.
Okay, but I want to point out that the Slack round that we all lost our collective minds over now looks like a pipsqueak compared to the Zenefits round. That's insane. 2015 is a very weird place for me. I don't know what's really going on.
2015 is a weird place. Speaking of weird place, Apple Watch. That didn't really fit as a segue, but the Apple Watch is live now.
I enjoyed it. Yeah,
I like the Apple Watch.
So after a couple weeks of pre-orders being open, the Apple Watch is finally shipping to some people. Not yours truly, even though I was on at 12:01 a.m. on the 10th to try and get one. But unfortunately, just gonna have to live with that. But actually, lots of kind of crazy news happening around that. 3,000 plus apps are launching with the Apple Watch today, which is kind of insane considering it's a brand new product with unknown demand, and also it's only iPhone customers can actually buy it. It's like forced.
But now I can put a burrito button on my wrist.
Yes, that was a partnership that was announced, I guess, yesterday, today. Chipotle is now among the 3,000 apps. So we're going to be able to just say, I want my typical burrito, and it'll say when it's ready, and basically you pick like a nearby store and go pick it up.
No.
So
is it surprising how quickly it sold out?
Yes and no. Yes in that it very quickly, like typically if you get within the first day of pre-orders with an Apple product, you get it on day one of shipping. And I show that if you were there in the first couple of minutes, you might have missed out on this first day. And actually, some people probably have already been bumped to like June from those early orders. And like,
did Apple just not make enough?
Yes and no, in that like they made way more than they typically do for one of these launches. If you look back to the iPhone or the iPad, it's a couple 100,000 units each, and the estimates for this first batch, the people who ordered and it says April 24th through May 8th, you'll probably get one. That batch is probably like 2 to 3 million units.
Oh, so it's an order of magnitude larger.
Yeah, this is their biggest product introduction by far ever, but it's at the same time they're supply constrained.
Yeah, have you used one?
No, I have not.
You have.
Yes.
I have. What's your first take on it?
It is one smaller than I expected. 42 and 38 are both way tinier on my wrist than I expected, having used like the Moto 360, which kind of dominates
Is that the
my
round
wrist.
one?
Yeah,
Yes.
that kind of dominates my wrist, and it's also considered a 42. So I expect it to be like that, but really they're both surprisingly tiny and light. The other thing is that navigating through the UI is smooth, but a little tricky at first. I think that it's very smart of them to have almost like force these early adopters to actually go use it in stores and not like, oh, you just go in and pick it up. You have to use it and then decide, okay, do I order online?
Is that to prevent returns?
I think so. I think that what's really going to happen is that like early like analyst research has shown that like people who try it on are significantly more likely to buy it, but I also think that those people are going to be less likely to return it because their expectations are actually going to line up with the reality of the device.
Exactly,
yeah.
Which is so key. I think Surface had a problem with that back in the day. People didn't know what it was going to be like. They bought one, they're like, this is not what I wanted.
And with Apple Watch, there's 38 variations of this device. So the fact that they actually let you go in for half an hour, oh, I want to try this on with this band, that on with this band, you actually get to have a feel for the entire line and say, okay, which of these will actually fit into my life.
Another part of the launch strategy I think is interesting, and Alexia wrote about it this week, is that they're sort of seeding the market by giving exclusive editions of the watch to people like Beyonce and Karl Lagerfeld and Anna Wintour.
And J.J. Abrams on stage for the Star Wars announcement, Apple Watch on his wrist.
Yeah.
Apple is so good at this. They're freakishly good at getting things in the right places. Also, that's a new level of cool. When Apple sends you stuff ahead of time, that's when you know you've made it.
Except I did notice that Beyonce was wearing it backward. Although I've also heard, I was talking to somebody about this, about how she was wearing it backward. She was wearing it so that the knob was on the other side where you'd have to cross over and no one would wear it like that.
Yeah.
But then someone said, or the crown, I'm sorry, excuse me, the knob.
That made it worse.
but someone told me that that's like a hip hop thing, wearing your watch backward. I think that person might have been trolling me though. I think that Beyonce just put it on backward because
it sounds like a possibility, but I don't know enough about rap culture to know either way.
Right, we'll have to look into that and report back. But last story here, Amazon earnings really blew it out of the water with the first time that they pulled out their AWS numbers.
Yeah, so AWS is Amazon's big cloud compute and storage play. And we've all known for a while that it's a big, big deal, but we didn't know how big. We had a couple of guesses, but no one really had the hard numbers. Doesn't make money. And they broke out the results for the first time, and the revenue number was $1.57 billion for this Q1, which was actually in line with expectations. But what surprised was it has an operating margin of 17% profitability. So I think people have presumed that it was growing very quickly, but that it was basically a break-even at best business.
Got it.
And it's interesting because it is kind of in line with expectations for how we think about Amazon more broadly in terms of generally it's okay, they can either maintain their like scale and be slightly profitable, or they invest all of those profits into whatever expansion they happen to be prioritizing at that time. And this shows that even AWS is, if they were just like, okay, let's operate as is, they could be profitable with it. And it's kind of a choice.
Yeah, but we're seeing decelerating growth. So 49% year over year Q1 revenue growth for AWS, down from 69% Q1 14, but law of large numbers, it's harder to grow when you have a larger base. But it grew 50% in the last year, so it's not bad.
It seemed to have been a good strategy, I guess, for Amazon to hold out for as long as it did before it could announce, because now their stock price is way up. People are so happy about this news right now.
They're up 15, 16, 17% right now, and they didn't even have that great of a quarter. They had $22.7 billion in total revenue. They lost $57 million. To contrast that, Microsoft had $21.7 billion in revenue, so $1 billion less, and had $5 billion in profits.
Wow.
So, it's a little different.
Yeah.
But no, Microsoft is boring, Alex.
It is boring, but it makes so much money. It's like an ancient ATM. You don't really want it in your house, but you want the money that comes out of it.
Right. That's a good analogy.
I'm going to get in trouble for that.
So how are people thinking about Microsoft, though? I mean, like, was the reaction similar? I mean,
they're up 10%
quarter
today. I mean, they beat on revenue, they beat on profits, and they also, everyone right now in the market's having a hard time with currencies because the dollar is so strong, it's really, really deprecating their international revenues.
Yeah.
And so Microsoft's like, look, we grew 6% year over year. It would have been 9%, which is a lot better than 6%. And so people are seeing a real drag on the Forex markets globally, which is an issue. But even given that, the tech companies that reported yesterday all went up, except for Pandora, which doesn't count. And so I think we're seeing strength among the giants, which could lead to increased M&A activity, perhaps a stronger IPO market. But for now, the music is still, playing
Well,
on?
partially, I think it's not even so much like M&A as like M&A displacing maybe like IPOs and late stage investments. If the market does end up cooling down in that side of things, having a bunch of big companies that are cash flush, it's probably a good thing.
But
overall.
I wonder how, if the things cool down and if startups end up getting squeezed at some point, then how that will impact Amazon, because they get so much of their money from startups who are paying their AWS bills.
If Netflix didn't lean on them so early, it wouldn't have been as big of a business for years.
Right. So.
Well, Amazon and Microsoft have a combined $105 billion in cash, of which Microsoft has $95 billion of the cash. So, like, there's again discrepancy here. But I mean, that's so much board capital that I think we're going to see a greater level of deployment in the second half of this year, which should be very fun.
Yeah, it'll be exciting. Give us more things to talk about.
Amen.
That's about all the time we have for this week. Tune in next week when we'll be doing a Crunch Week from New York City, where we'll be for our Disrupt conference. Thanks for watching.